In Marcus Meyer. He is the CEO of Meyer Bergman. Marcus, good morning to you. Just before we talk about the e-commerce story more broadly, I just want to focus a little bit on what Steve was telling us, because not only have we got the risk here of delays cross-border into the UK, but there is still this issue that is pandemic related of the EU opening up its external borders. Now, for you involved in logistics and last mile delivery, that must be a real headache right now.
Yeah, I think for the time being, we haven't seen a real impact of some of those restrictions on the last mile logistics sector. I think it's been largely offset by the strong growth in e-commerce and the demand for home deliveries and office deliveries. But obviously, we're monitoring it carefully, and we want to make sure that we're prepared for whatever challenges are posed in the next couple of months.
Well, how optimistic or otherwise are you that we will see a eurozone economy that gets back to business after this COVID-19 crisis and returns to the kind of growth that we saw in 2018/2019, albeit some of that beginning to slow?
Yeah, I think it's a good question. I think it really depends on which sector you're talking about. And obviously, I'm specifically talking about real estate. I think the logistics sector has benefited, perversely, very strongly from the COVID crisis and during the COVID crisis. And we think it will continue to perform well in the next couple of months and in the future. I mean, that's primarily, obviously, because e-commerce has taken such a big jump over the last few months. And we think that's a lasting effect. Obviously, other sectors going through much bigger change and will be more challenging for the coming months and maybe even the coming year.
Marcus, I need to paraphrase the 3 previous years on Scorebox for you. We've had a row about Ocado, okay, about the profitability versus the growth. So that's just the paraphrase, and there's been various constituencies in that. But Ocado raising £1 billion in the last couple of days has raised those same old questions, and we're not going to rake over old ground. But what I want to say to you is, can there be profitable growth in this sector? Because it surprised me, and I don't know about my colleagues, I'm sure there's both sides of the equation, that a company that has had such stunning performance on the share price, stunning performance in terms of growth of sales, which has lost so much money over the last few years, which is a 20-year company, has to raise money rather than using it through cash flow. So my question for you is, can there be profitable growth in this sector?
I think that sector specifically, particularly, the sort of groceries and consumer goods market, I think it's all a question of scale. I mean, obviously, it's an expensive business to build and to continue to innovate and grow. And you can see with Amazon that it is possible to generate substantial cash flow in that sector. But I think it's all about growth. And I think that's why Ocado needs to continue to raise money to try to get that growth and potentially also expand into other markets. I mean, otherwise, as you say, I think the margins will continue to be under pressure.
Marcus, what Ocado was doing with that capital raising this week was to build those customer fulfillment centres, the last mile delivery, exactly what you're talking about, trying to get investors into warehouses where they've typically been underinvested. They've spent more of their time focusing on the office side, but clearly there's been a monumental shift in those patterns now. My question to you is whether you were in direct competition with companies like Ocado that are doing it themselves, building those warehouses, and investors directly can get exposure if they buy into, say, a stock like Ocado, rather than being directly invested in a REIT?
So it's different types of logistics. Ocado's logistics facilities have pretty highly advanced, customized robotic systems for sorting and deliveries and things like that. And that's why the capital expenditure to build out those facilities is really expensive. Our tenants tend to be people like 3PLs, which are the major logistics companies themselves. So the FedExes, the GLSs in Europe, the DPDs, etc. But it's also people like Amazon, and those are groups that don't require, robotic systems in their last mile logistics facilities. So in that sense, it's really a different kind of product, and we're not really competing with Ocado. Those facilities, I think they almost have to build themselves just because it's their proprietary systems.
What do the numbers look like in terms of correlation with the pickup in online sales in the UK? I mean, we saw some data and it was only on the grocery market, so clearly slightly different when we're talking about non-discretionary items across on general merchandise. But there's been a pickup on the back of the COVID-19 trends where groceries moved to about 13% market share from 7%. Is there a direct correlation to the demand for warehouses that you're seeing?
It's hard to make a direct correlation, but what I can tell you is I think the majority of the news that's coming out from major, non-food retailers, so this is fashion, accessories, things like that, technology, the online penetration rates as a percentage of overall retail sales are, somewhere between 30 and 40%, which is significantly above where it was pre-COVID. The UK was sort of around 20%, maybe just over 20%, and the expectation was that over time, potentially that could grow to 50%. And I think the fact that we're now hitting numbers like 40% for many of these retailers, including people like Zara, which was obviously in the news yesterday, I think that means that we expect that the demand for the logistics space to be able to support that growth will continue and will only get stronger.
Marcus, just one thing that bothers me about the last mile story, and that's the proliferation of vehicles that are involved in trying to efficiently get you the product as quickly as possible here. How far are we away from proper drone delivery or other vehicles that maybe are less environmentally unfriendly?
Yeah, no, very good question. I think there's a big push, and you know that Amazon has made some major early orders for the Tesla semi trucks and other essentially non-polluting vehicles. So I think that trend will continue and that pressure will continue. I think that drone delivery is probably a longer-term solution that probably will be more difficult to implement short-term. As you know, the UK is still trying to find out a way to allow electric scooters on the roads. So I think it will take quite a few years before they're able to develop a regulatory regime to be able to manage and regulate drone deliveries. But I would say probably in the future, all those different types of deliveries will probably become a reality at some point. But we think that for the foreseeable future, these last mile facilities will be necessary in any event because it will be much more challenging to have a drone that flies 3.5 hours, for instance, from an airport or a major logistics hub to your house. So it will still be a question of using these last mile facilities to have the sort of intermediate step before it comes to your home or your office.
Terrific, Marcus. Thank you very much indeed for that. And judging by what I see on the streets in London every day, that rabbit is already out of the hat, whether there's laws on it or not. Marcus Meyer, the CEO of Meyer Bergman. Plenty of those electric scooters around on London streets. Coming up on the programme.